Let's move it over to New York and the VIX index, a.k.a. the Chicago Board Options Exchange Volatility Index. We call it the fear gauge. It's flashing warning signs once again. And Michelle McQuarrie has a story from our New York studios. Michelle?
Hi there, Susan. We'll call it the VIX index, the fear gauge, the volatility index. Either way, it is flashing some big red flags after it moved past a key level on Monday, indicating possible troubles ahead for the market. Now, the VIX, which tracks the cost of using options as insurance against declines in the S&P 500 index, jumped 9.8% to 30.91 in today's trading, closing at 30.8. Now, a reading of higher than 30 generally indicates high volatility, and that usually accompanies stock market drops. And that inverse relationship between the stock market and the VIX was in full effect today. The S&P lost more than 2.4% as stocks fell on a stronger dollar, and news that New York manufacturing activity has slowed more than expected in June. Now, while some of the data points of the economy that we've been receiving have been better than expected lately, this New York Fed reading is a reminder that the economy still faces a lot of pressure.
I would expect the VIX to work its way higher here only because I think there's probably a pretty good chance here for, at the minimum, consolidation and probably more something like a 10% pullback.
Now, as you recall, the VIX index peaked above 89 in October, and then it dropped off to the lowest level since Lehman's bankruptcy, hitting a reading below 27. That was on the 19th of May. Investors seem to be reassured by the results of the government stress tests of banks, but it is creeping back up, closing again today at that 30.8 level. And we at Bloomberg over a week ago reported that analysts at Citigroup were saying that the VIX may retest that 34.5 level, which, Susan, would suggest danger of a pullback for the S&P 500. Susan?
Okay, Michelle, so you have the VIX showing that American investors are having some shaky knees right now. But what about the rest of the world? I mean, what other fear gauges are there to look at?
Well, that fear seems to be creeping across the pond. Emotions are contagious, as they say. And in Europe, the V stocks surged the most since March 2nd. It gained 14% to 31.97. Now, this as the Euro Stoxx 50 stock index lost 3.1%. The UK's FTSE 100 volatility index and German's VDAX options gauge also up 11.7% today. So, Susan, it seems that investors should be watching this because there's a lot of volatility ahead. Susan?
I'm sure they are. All right. Thank you for that, Michelle McQuarrie in New York.